All right, well, we'll go ahead and get started, and I'm sure we'll have some more people joining us live. But so today's webinar, we are going to be focusing on the latest provisions available to small businesses, focusing on paycheck protection developments, the employee retention credit, and then updates from the American Rescue Plan Act. And so today we have Kristine Tidgren. Hopefully I pronounced that right, Kristine. So Kristine is an adjunct assistant professor in the Agricultural Education and Studies Department and the director of the Center of Agricultural Law and Taxation. Kristine's work focuses on studying and interpreting laws impacting the agricultural industry. In particular, she focuses on taxation. And so with that, well, I would like to welcome Kristine and thank her for providing her time today for sharing some of her information and some wisdom on the changes going on. And I'll turn it over to her to kind of focus on the information that you guys logged in for.
Wonderful. Thanks, Jessica, and thanks to all of you for being online. I wish I could see you all and we could have a conversation, but right now, what I want to make sure that we understand is that I am here to answer your questions and to kind of direct the conversation in the way that you would like it to go. And so I understand we sort of have a diverse range of people out there in terms of the businesses that you operate. So we don't have a lot of people to the point where we can't ask questions throughout. So I've got my little chat window open here, and I hope that you will type in questions as we go along and we'll try to get those addressed. I also have my contact information here. So sometimes you might have a question that's a little sensitive to your business, or it's a little bit, complicated for a larger group, and just shoot me an email. That's what we're here for, is to provide information and assistance and just hopefully be able to get resources out to people who need them. And as Jessica said, a lot of my work at the Center for Ag Law and Taxation focuses on agricultural businesses. But when it comes to all of the COVID relief and the tax changes and everything else, we've really had to stay on top of the relief generally. So whatever kind of business you're in, hopefully we'll be able to get you some resources that you need. And again, I do like to hear from you, so feel free to reach out to me after this presentation as well. We only have an hour today, and that may sound like a long period of time for some of you, but with all of the things that have happened, with all of the changes to the tax law, the new relief provisions, et cetera, that's just going to be scraping the surface. So what I'm trying to do today is just provide highlights, and I'll send Jessica a PDF of the slides that we're using, and hopefully she can email those out to you as well. So some of the slides are a little dense with words, and we're not going to read all the slides or anything like that. I made them dense with words so that this can be a resource for you after the presentation as well. And then I also want you to know that our website, and I'll show you a link to that soon, our website has lots of blog posts and resources as well, information that kind of unpack a lot of these changes in a lot more detail. So really the three areas that I want to focus on today are changes that occurred at the end of December through the Consolidated Appropriations Act, which was another $900 billion of relief for COVID-19. And then the American Rescue Plan Act that just went into law several weeks ago, $1.9 trillion of changes, and a lot of those impact taxation in a way that is meant to provide relief to struggling businesses and struggling sole proprietors and things like that. Also, the PPP Extension Act is really big. That was just signed yesterday. We'll talk about the fact that that is going to extend the deadline for lenders to submit their applications to the SBA to May 31st. But I don't think anyone at this point really thinks we'll have that long. So that's one thing I want to encourage you today, is if anyone has not applied for loans for which you're eligible, you'd better go now. Don't think that you have until May 31st. And we'll talk about that this morning in more detail. So just a highlight of a few things. What was in that Consolidated Appropriations Act that was passed at the end of the year? So if you look back to this crazy year, all the way back to a year ago today, and all the relief that has happened, all of the new provisions, of course, the mother of all COVID relief until this point was the CARES Act, which went into place about a year ago. And that's where a lot of these provisions were birthed, like the PPP and the ERC. But legislation like the Consolidated Appropriations Act and now the American Rescue Plan Act have really changed these things and have made them more accessible, more generous. So that's what we're going to focus on. So I've listed here the major changes that occurred with these various laws, but I'm not going to read the list. I'm using this just for you to have sort of a reference. What I do want to do, though, is to highlight a couple of items in the American Rescue Plan Act that we likely won't have time to talk about today that will likely be of benefit to some of you. So the things that we're going to talk about, I'll skip past, and I just want to highlight a couple of other things. We're not going to talk about the expanded child tax credit, but for those of you with children who have less than a certain amount of income, your child tax credit is going to increase from $2,000 per child to $3,000 per child. And if you have children under 6, it's going to go up to $3,600. And this is going to be fully refundable as opposed to partially refundable as the old child tax credit was. Now, in the world of tax credits, when we say refundable, most of you know that what that means is it's free money. It doesn't offset tax that you actually owed. It's above and beyond that. So anytime we say refundable tax credit, it means, oh, it's like a grant. It's like free money. Which is important to understand. The also interesting thing about the child tax credit that we'll be learning a lot more about in the months ahead, because they've got to get some regulations in place, is starting this summer, the IRS is supposed to be making payments to people with children, sort of advanced child tax credit payments. Again, it's going to be a little complicated, but it'll be very similar to economic impact payments in terms of how those payments will be made. But it's going to be a little bit different because unlike the economic impact payments, these payments with the child tax credit will have to be reconciled if they somehow pay you too much. So just file that in the back of your mind. I just wanted everyone to sort of be aware of the fact that that is coming down the road this year. The other thing that we won't talk about today is for those of you who pay for dependent care assistance, the tax benefits for that have really substantially increased because of the American Rescue Plan Act. Also, a really important item I want to point out, because I know a few of you are restaurants, the Restaurant Revitalization Fund is a brand new program that was authorized by this American Rescue Plan Act. We haven't seen all of the guidance. It's just going to be initiated this coming April. You need to look into this if you are a restaurant. It's going to depend upon your pandemic losses, how much money you're going to get. You're not going to be barred from having such a grant if you got a PPP loan. However, the PPP loan will sort of strike against you. Let's just say that. So again, we're waiting to see more guidance and information about that, but I want to make sure any restaurants out there stay really tuned to understanding what this Restaurant Revitalization Fund is so that you're aware of that relief as it becomes available. This is going to be different from PPP in that with the Restaurant Revitalization Fund, you're going to have to go to the straight through the SBA. This is not a program that you go to your lender for like we have with the PPP. This is a program that we're going to have to go to the SBA. Hi, Jessica. I see you've popped up here.
Yeah, I probably just do that from time again. So we've got some questions coming in,
Right.
but and I know we'll answer a bunch at the end, but specifically in the chat function, Angela had asked, she's a caterer, but a food truck. So would that restaurant revitalization fund help her type of business since she's not like a brick and mortar?
Yeah, and we're not quite sure yet exactly what the rules are going to be for that. So great question, Angela. We'll stay tuned on that. It's not, I'm not sure about that, but we'll be getting information and rules on that, I think, very soon. So you should definitely watch and see how that develops. There's also a shuttered venue operators grant, which is different from it's having to do with live theaters and things that were closed down. That's another new program that's available as well. So those are the items that I don't have prepared material on, but I wanted to make sure that you're aware of those items. There is other relief provisions as well, but you know, I have this picture here because it's hard enough. I mean, I get to stay pretty much full-time focused on all of this information that's coming down the pipe, and you all have to run your business, right? You have to focus on that, and it's just really difficult to think how everyone can stay on top of it. Because, you know, relief provisions are awesome, but if you don't know they exist, then they're not going to help you. So my goal today is to just kind of give you resources, give you awareness of maybe some new provisions that you might not have realized. And then hopefully we can follow up with any more detailed issues that you have afterwards with emails and things like that. So if you want more detail on any of these programs, I do want to direct you to our website. It's www.cult.iastate.edu. And out there is where I really post all of the updates as they come in terms of detailed information. And the thing that I find the most important about the information that I post is I try to link everybody to the source document. So it's not what Kristine says about a particular thing. It's what does SBA say? What does the Treasury say, et cetera? IRS, what do they say? And so I try to link you to the resources because sometimes it's a full-time job for you just to try to figure out where to find the information that you need. So that's part of the work that we try to do, is to link you to what you need. So you can go out there, you can read articles, blog posts, and again, you can always follow up with me via email if you have particular questions. So I know one of the key questions that a lot of you had, or issues that I was asked to address, was where are we right now with respect to PPP? And the Paycheck Protection Program obviously went into place with the CARES Act. The original program expired August 8th. We still had money on the table, right? They let it kind of expire with $133 billion still left on the table. But at that point, $525 billion of loans had been made. And then it was silent, right? Then we were just left with people who had received loans trying to figure out what to do about forgiveness. And we had a whole bunch of confusing turns and twists with respect to the deductibility of expenses. And so where are we now? Well, where we are right now is the end of the year law, the Consolidated Appropriations Act, reauthorized and extended the PPP. And how it did it is it put $284 billion of new money into the program. So of course we have new first draw loans. So if any of you out there have never received a PPP loan, there's a window that you have that you can go and you can get a PPP loan. It also allowed a narrow set of people to get increases to their first draw loans. These were primarily agricultural businesses, farmers who had received small loans because they had net income used for their initial loan calculation. And the law said, okay, you can get an increase. Also, a few situations like partnerships that had not included any compensation for their partners were allowed an increase. But for most most purposes, the increases are kind of done now because in most cases, the window has likely closed. The other really important part of the new PPP program, though, was the second draw loan. So what this said is you got a first draw loan either last year or this year, and we're going to talk about the timing issue because this is a big deal. Then you could get a second draw loan if you met certain requirements. So we're going to review those real quick. And again, the CAA, the Consolidated Appropriations Act, gave us a new calculation for self-employed farmers. And we've since gotten a new calculation for self-employed non-farmers. So if you file a Schedule C, if you're a self-employed sole proprietor, you have a totally new calculation available to you if you have not already applied for your PPP loan. Now, the American Rescue Plan Act of a couple weeks ago, it did not do much for PPP. It gave 7.25 billion, which in most cases that would sound like a lot of money, but in the context of the program itself, it really wasn't much. So that's what we have. We have the 284 billion plus the 7.25 billion, and that's the money that's going to be run through during this reauthorized PPP program. Now, a couple of other things have happened that are very significant. As I said, the SBA, at the urging of the president, issued a new rule, but it wasn't until March 3rd. And the new rule said Schedule C filers can now calculate their PPP loan based on their gross income instead of their net income. And so I put a sad face there. This should have been happy news, but the sad face is that you can't go back and retroactively get an increase. So if you were on the ball as a Schedule C filer and you got your loan and you use net income, and now you wish you could go back and get gross, the rules don't allow you to do that. Hi, Jessica, I see you're out there. Is there
Yeah, so we've had several questions specifically on PPP and the draw one, draw two, and some different things.
Yeah. So what I'm going to do on that, is, if it's okay, is there's a certain amount of information within PPP I probably need to sort of cover so everybody's on the same page, and then I'll go through the question box and answer those PPPs. So if that works for everybody, that's probably the most efficient way to do it, because otherwise folks that don't know sort of the basics will be left in the dark as we try to answer some of the more complicated questions. So
keep encourage them to put them in the chat, and we'll get to the questions soon.
That's awesome. And you pop in if you see something urgent that I'm missing here. So thank you for that. So again, there was a point in time where, if you just submitted a loan, that you could go to the lender and say, hey, have you submitted it yet to SBA? And if they hadn't, you could still pull it out and you could revise it to use gross income. But it's a little different for Schedule C filers. And of course, the difference between gross income and net income can be quite significant. So a lot of Schedule C filers may not have been eligible for a PPP loan in the beginning because their net income, after they took all their expenses away, it might have been zero or it might have been negative. They might have had a net operating loss. Also, they might have just had a low amount. And so the golden number in PPP, if you're not familiar, is to get $100,000, because that's sort of the maximum for sole proprietors to be able to use. If you have anything over that, it's kind of superfluous. So if you have 100,000, then your loan amount is going to be 2.5 times your monthly average, which for a sole proprietor is $20,833 loan amount, is what you're eligible for. So if you can look at your gross income instead of your net income, that might get you to the 100,000 to get you that maximum loan amount. That's the goal. Now, the interesting thing about this for Schedule C filers, and this doesn't apply to our Schedule F filers, is that if the borrower elects to use the gross income, then what you've done suddenly is you're not going to be eligible for the safe harbor if you have more than $150,000 in gross income. You won't be eligible for the safe harbor that says the SBA isn't really going to stick its nose into whether current economic uncertainty made this loan request necessary. Okay, so if you're under $150,000 in gross income, you don't have to worry about this. If you're over it, you have to be aware that if you choose to use your gross income, the SBA might send you a necessity certification. And if you really need this loan, don't worry about it. But it'll just be more hassle for you, where you'll have to go in and you'll have to justify why you need the loan, etc. So just be aware of that. Then also, the expansion with the American Rescue Plan Act expanded it so that a whole bunch of new tax exempt entities are now eligible for PPPs. These groups were not eligible before, all of them, some of them were, but now almost any group that has a 501c designation, whether it's C3, whether it's C5, whether it's C6, most of them are going to qualify. Now, C4s, which are social welfare organizations, do not qualify. And then there's some size restrictions and there's some lobbying restrictions. And then the big thing to understand about the PPP is that the deadline for the PPP was extended by the PPP Extension Act, which I just said was signed yesterday. And so the deadline is May 31st. But most experts believe that the money is probably going to run out in a couple of weeks. So we're really up against a timeline, and you need to get in with your lender immediately to see if you can get a first draw or a second draw loan submitted. Here are the numbers as of March 28. There had been $734 billion overall for PPP for all the PPP programs. And in 2021, so using the 284 billion plus the 7.25 billion, $211 billion of loans had already been approved, right? So this doesn't count the loans that have been submitted that haven't gone through the approval process. So, money is going to run out. So I was going to go through some key considerations for those who have not yet received a loan, but I think I'm going to look in the question box and make sure that we're following the things that you want to know about. So I'm going to look at the questions right now and see. If you have two offices, but only one tax ID, one office dropped 30%, the two combined only 17.5, are there any PPP funds in that case? So we're talking about the second draw. And so just to kind of cap what our options are, is we have a first draw loan for somebody who hasn't received a PPP loan before. And if you are eligible for a first draw loan, you don't have to worry about revenue reduction. If you've already received a first draw loan, and now you want a second draw loan, then you're only eligible if your gross receipts decline by 25% or more in any quarter in 2020 as compared to 2019. Or if you want to make the case that your overall revenue declined by 25%, then you can use your tax return for 2020 and compare that to 2019. And it doesn't have to be done at the time you file. You just have to satisfy yourself that you will have declined by that. And then at the time that you apply for forgiveness, that's when you'll have to present the documentation. But the question here that you've presented is an affiliation question. And so affiliated businesses are all combined together when they are seeking their loan. So it's going to be considered to be one business. And so depending on what type of business you are, that rule might change, but yours is a little something that the details and the facts matter. So if you want to shoot me an email, I could help you maybe unpack it with respect to your particular business. Can a credit union not accept your application for PPP? They said they have filled capacity. I'm a caterer, but a food truck. Would that restaurant they're back to that question. Can a credit union not accept your application? Yeah, a lender doesn't have to submit PPP applications. I would encourage you to go to a different lender. There are plenty of lenders. Now, the only caveat is if you were seeking an increase for a loan, then you would have had to go to the same lender that you used before. But otherwise, just go to a different lender and see if you can get help there. Can you speak to the timeline between draw 1 and draw 2? You mentioned the application timeline, however, the funds might not be available. And yeah, I'm going to share the slides, and I actually have a slide here just about that. So in the slides, I also just have a little bit of information about first draws, but my website has lots of information. There's a very detailed article that gives you lots of information if you need that. Also, the key difference that we have now with PPP as compared to last year's PPP is what's going to happen. And so we have to understand this to understand how PPP 1 and first draw and second draw fit together, is that we have an optional covered period for each loan that we get. So if I get a first draw loan, my covered period started on the day my loan funds were disbursed. And then I can choose an 8-week covered period, a 24-week covered period. I can choose a 20-week covered period. I can choose a 15-week covered period. I can choose whatever I want, but it has to be 8 weeks. Within that 8 weeks, I have to be able to spend all of my money that I get from my loan in order to qualify for forgiveness. And 60% of that has to be on payroll costs, and 40% of that can be, at least 60% has to be on payroll. It can all be on payroll. That's like the goal. But if you don't have enough payroll, you can have 40% of those costs be on these other eligible costs. And those have been expanded as well. And I think one of you asked a question about perishable goods. That's a new expense that can be included in this whole forgiveness. And that has to do with a restaurant that perhaps bought food and then they couldn't use it because of a declined capacity of people who were eating at the restaurant. And so they lost money on that. And so they can actually count those expenses for what they paid for that food that ultimately perished as their expenses for forgiveness if they need additional forgiveness expenses. So when you're self-employed, the thing that you have to be aware of is if you don't have a payroll, if you don't have other people that you're paying and you don't have other expenses, then what you are allowed is just owner compensation. And so most self-employed people with a Schedule C or a Schedule F are going to, if you had $100,000 now of gross income, then you qualified for a $20,833 loan. If you took that loan and you have no other expenses, you would need to choose a covered period of at least 10.33 to have maximum forgiveness of that owner compensation, because you have to have that number of weeks to be eligible for that much. If you choose an 8-week covered period, the rules only allow you $15,283 of owner compensation. So the interesting thing, if you try to stack first draw, second draw, is we have a couple different rules. And I think I put a slide in here, so I'm going to show you that. But here is the information about second draw loans. And the key thing is your covered period for your first draw loan and your second draw loan cannot overlap. So if I had a first draw loan last year, it was no problem. Obviously, it's not going to overlap because my covered period's way over. But if I have a first draw loan this year, it's going to depend on how long my covered period was for that first draw loan. So if I got it in January and I had a 10-week covered period, that covered period's over. And as long as I've spent all of my proceeds, and as long as I qualify for the second draw loan, because my revenue was reduced by 25% or more in 2020 as compared to 2019, then I was golden to go ahead and apply for the second draw loan. But if I didn't get my PPP loan until now, my first one, I'm not really going to probably be able to get a second draw loan because the rules say the coverage periods cannot overlap. So you have to have at least 8 weeks, and then you might not get your maximum forgiveness depending on whether or not you have other eligible expenses going into that. So, that is kind of the complication. The farmer rule is just that we also get to use gross income if you're a farmer as well. And again, your slides are going to give you more information on how to calculate that. I have some questions here on the timing. that I've answered that kind of go hand in hand. So if you got a first draw loan in 2020 and a second draw loan in 2021, yeah, absolutely. That's what the second draw loan was really intended to be for. Must you have received forgiveness for your first draw loan before you get your second draw loan? And the answer is no. There's no requirement at all that you have to get forgiveness on the first draw loan. It just says that the first draw loan proceeds have to have been spent before your second draw loan is dispersed. And then we just addressed this third one. May I receive the first draw and the second draw both? And there might be a timing problem because you have a minimum coverage period of 8 weeks and those coverage periods cannot overlap. So that's really the one restriction that you just have to really look and see. Then I have a question about ERC, which we're going to get to. If your own credit union can't help with PPP due to capacity, who can I apply with? There are lenders all over the place. I'd talk to one of your colleagues here at the chamber and see perhaps what lender they use. Most lenders have been getting in the game, so I would try another lender. I keep saying sole proprietor, but my business is an LLC. I was the only employee, but paid myself what my bills were. This is my first 2020 first year in business. Okay, so you are one of those unlucky ones, but there are new rules for people who just went into business in 2020. So you might need to email me and I'll send you those specific rules. When I say sole proprietor, it includes an LLC if you're treated like a sole proprietor as long as it's disregarded. Now, the only thing that confuses me about your question is that you call yourself an employee. So if you're an S corporation, then the rules are a little bit different and you still can have a PPP loan. However, your PPP loan is going to be based upon the payroll for yourself as the employee. So you'd have to look, if you're an S corporation, you have to look at the loan calculation rules for an S corporation. If you're a typical LLC single member is just going to be disregarded. They're not going to be incorporated. They're going to be the LLC, not taxed as an S corporation. Because the crazy thing about an LLC is that you can be taxed as a disregarded entity if there's just one person, which means you're taxed just like you had a 1040 with a Schedule C. Or you can make yourself taxed as an S corporation, or you can make yourself taxed as a C corporation, or if you have multiple people, you can be taxed as a partnership, etc. So it's kind of an interesting, very flexible option. We also have a situation where husbands and wives sometimes are joint ventures, and the rules say that you can use both of their Schedule Cs, but it looks like you have a maximum of 20,833. Here's a question. We are having trouble qualifying for the second draw due to opening in January and being in ramp up phase until COVID hit, thus not being able to show the necessary losses in applicable quarters. Are you aware of any changes to help qualify? Would you email me and let me know what business you're in too? Because there's some new rules that could apply to you or some other forms of relief that might be beneficial. Oh, hi, Jessica. I see. Did you
I
need
think
to
you
say?
just read Lindy's comment. So she's got a daycare.
Okay. Yep. Perfect.
Preschool
Okay.
daycare. Sorry, Lindy, if I didn't say that properly, but preschool daycare.
So yeah, Lindy, go ahead and still email me and I'll help you. It's a little more rocky situation with you, but I'll see if I can help you come up with perhaps another solution. If you take 150,000 and then end of year don't end up at a loss of 25% total income for business, what is the ramification for the second draw? Okay, so remember what the second draw requirement is. Let's go back and look at that so that we're all clear about that. You have to have experienced a revenue reduction of 25% or more in 2020 relative to 2019. And so what we're looking at is we're looking at one quarter in 2020. So you're looking backwards. You're not talking about 2021, you're talking about 2020. And if you can show that you had one quarter that had that reduction, it's like a flip is a switch is flipped and now you're eligible, right? And then if you have your overall income 25% or more, that's another way to show eligibility, but you only have to show one quarter. So it's not for this year. So there really shouldn't be an end of the year problem. I hope that answers your question. We are, let's see, second draw. If you take, okay, and what's the interest rate if not forgiven? I want to say it's 1%, but that's in all of my PPP articles. And I'd have to look that up, or you'll have to look that up for yourself. But again, you shouldn't have trouble qualifying as long as at least one quarter from last year was less than the year before. I am a 1040 Schedule C. I will send you my email. Okay, perfect. I cannot overall or by quarter, but 7.25. Okay, sorry, some of these are a little too specific. I can't, you know, get too into the weeds with one particular person's detailed question, or no one else will benefit. So yeah, my contact information is on the slides I send out too. So let me see if I can get to some of this other relief. Keep the questions coming. I just want to make sure that we keep this applicable to everybody. Oh, hi, Jessica.
Hi. So we did have a couple questions submitted in the Q&A too. So we've got one that asks, are farm partnerships able to use Schedule F off of the partnership return in their PPP applications?
Yeah.
And has the SBA provided any guidance on that?
Yeah, they actually have. And the unfortunate answer is no. And so that information just came out in guidance a couple weeks ago. So I have that guidance and a link to it on my website. The latest article about the PPP Extension Act being signed has all of the recent rules of PPP that were issued. So if you want to find that, you can go out there and find it that way. Did you say you had another one too,
Yep,
Jeff?
and we've just got one more in the Q&A. So it was asked, so the perishable goods isn't currently goods, just those lost?
Yeah, it's intended to be those that were lost because you couldn't use them, is the way that the statute describes it. Again, all this has evolving guidance. So it could be a possibility that something has changed on that. And maybe I'll look that up and make sure that nothing has been changed on that since it originally came out. But that's really the intent of the perishable goods expense is to compensate when you lost goods that you paid for because your business was down. So let's look at the forgiveness. So is there anybody else that had a question about getting a loan right now? If you did, go ahead and put that in there. The next thing is, once you get a loan, of course, the key thing is forgiveness. And so the question is, when do I have to apply for forgiveness, and what do I have to do to get forgiveness? And the good news is, if your loan is up to $150,000, forgiveness is pretty much just signing a certification with a very simplified application. And if you are dealing with a second draw loan, then you will be required to submit your documentation that you had a decrease in gross receipts. So that's the documentation that you'll have to submit. But otherwise, you won't have to do a lot of things. You'll have to retain any employment records that you have for your own self in case you ever get audited. But otherwise, it's not a complicated process. And when do you have to apply? That's the picture of the form. But the timing is that you can apply for forgiveness actually any way up until the end of the maturity date of the loan. So that's forever. You don't want to wait that long, right? After 10 months, so at the end of your covered period, so I get my loan, I have a 12-week covered period, let's say. at the end of that 12 weeks, then a 10-month period begins to run. And at the end of that 10 months, if I haven't applied for forgiveness, it's still not too late to apply for forgiveness. But what will happen is I will have to repay my loan. I'll have to start making payments on interest and principal if I haven't yet applied for forgiveness. So that's how that works. And then in terms of if I got both a first draw and a second draw, all that the guidance says is that a borrower applying for forgiveness for a second draw loan that's more than $150,000 has to actually submit the forgiveness application for the first draw loan either before or at the same time. Otherwise, for smaller loans, you don't really they're not really considering it even necessarily an application because it's just more an affirmation. So basically, you could submit your application for forgiveness for both at the same time. Now, as far as those of you who got these loans, if you got a loan and you get it forgiven, the key thing to remember is it's excluded from gross income. It's like a grant, it's not taxable. And then all of our expenses are deductible. That got resolved at the end of the year with the Consolidated Appropriations Act. So it's free money that you don't have to ding expenses. So it's a very, very helpful program. And then if you're a pass-through business, so if you have a partnership or an S corporation, you still have that tax exempt nature. You still get to retain your deductions. There's a little bit more complexity in terms of some questions of exactly how to report that, but that can be worked out as well. So that's the PPP information. Another program that I really just want to highlight to make sure you're aware of it is the Employee Retention Credit. And this is going to apply both retroactively and prospectively. Now, what the Consolidated Appropriations Act did at the end of 2020 is say, hey, we had this rule with the CARES Act that said if you got a PPP loan, you couldn't take the Employee Retention Credit. And the Consolidated Appropriations Act did away with that rule. So now if you took a PPP loan, you can still get the employee retention credit. The only bar is that you can't use the same wages for payroll expenses for your PPP loan that you use to calculate your credit for the employee retention credit. And if I'm talking like Greek because you don't know what the employee retention credit is, I'm sorry, let me just explain real quick what it is. The employee retention credit is another refundable credit, which, as we've said before, basically is like a grant, because what happens is, looking backward to 2020, it wasn't quite so generous, but employers who met certain requirements, and the requirements you had to meet are down here on this chart, down here, number 1 or number 2, either one. You either had to have your business fully or partially suspended because of a government order, or you had to have a significant decline in gross receipts. And for last year's program, that significant decline was 50% or more. And so, it wasn't quite as generous. And then if you qualified, what the benefit was you got to take $10,000 of wages that you paid to your employee, and the maximum credit was 50% of those wages. So basically for 2020, and it was for the whole year, you had a maximum credit of $5,000 per employee. So essentially, for keeping these employees on the payroll, you would qualify for $5,000 refundable tax credit per employee, but that was for the whole year. Well, this Consolidated Appropriations Act, so here's what it would look like in 2020. And so if you didn't claim it last year, you can now go back and claim it via an amended return. And this does not apply to sole proprietors or self-employed people. This applies to people who it does if you have employees, right? I shouldn't say that, but it doesn't apply to your own compensation. Then, for this year, though, this is what you need to understand. This credit has been blown out of the water with new generosity. So instead of a maximum $5,000 credit for the year, this credit has now been expanded for all of 2021. You qualify now if you only have a 20% reduction in gross receipts. And what we look at is we look at this calendar quarter. For in calendar quarter 1, we compare it to calendar quarter 2019. And if we have a 20% reduction or more in gross receipts, we qualify for that quarter. And the credit is now 70% of wages up to $10,000 per quarter per employee. So if you're following along, it's $7,000 per quarter per employee if you qualify, which can be an extremely generous credit. So I'll leave it at that, just so that you're aware of that. I'm going to look and see if we have questions about this credit. So yeah, somebody says, I believe it's $7,000 per employee now. Yeah, exactly. Just like I said. So we have to keep track of last year it was 5,000. This year it's 7,000. Last year it was 5,000 for the whole year. This year it's $7,000 per quarter. So it's a tremendous amount. If a business is closed for a period of time, does the employee retention credit apply to the whole quarter or just the time period? All right, great question. So if you don't have a decline in gross receipts and the only way that you're qualifying is based upon the partial closure order, then the eligible wages that you can look at to calculate your credit are only going to be those wages that you paid out during the time that you were closed. So I hope that answers your question. But most people who are closed are also going to likely qualify under the gross receipts. And if that's the case, then you can use the whole quarter. Let's see. I thought a new question came in, but maybe not. Okay.
Kristine, it looks like we've got a Q&A question that got submitted in the QA. So this person only made $22K gross on her Schedule C before COVID and then took unemployment that paid $26K. Would I be able to still apply for PPP?
Yeah, good question. And the issue is you're not going to be able to get PPP for any period where you are currently drawing unemployment, but as long as it's not the same periods, then you'll be eligible. So you have to kind of work it out with your lender to see, when did you take your unemployment? When did that end? Is this a new covered period when you're not taking unemployment? That's what you have to look at for that. And speaking of unemployment, I want to make sure that we cover, because we don't have a lot of time, and I want to make sure I highlight a couple of really important things for you. One thing I want to mention, because I see there are quite a few people out here who are sole proprietors or maybe an LLC with a single member LLC or something like that. I don't know how you get your health insurance, but a couple of really important items were changed by the American Rescue Plan Act with respect to people who go online and get their insurance on the marketplace. So a couple things. First of all, under the old law, if you went out to the marketplace and you qualified for a premium tax credit and it was paid in advance, you had to have income below 400% of the federal poverty limit. So if you were a single person, that meant your income had to be in the 40s and below. If you were married, in the beginning 60s and below. If you had income above that, you didn't qualify for a premium tax credit. So if you tried to buy insurance on the marketplace, it would be way too expensive. I mean, we have horror stories, right, of people would have had to pay $40,000, $50,000 a year for insurance if they didn't get premium tax credit. But if they just dipped below the 400%, then suddenly they were eligible for a premium tax credit that would lower the amount they had to pay to about $12,000. Crazy difference, crazy law, right? If you somehow during the course of the year went above 400% of the federal poverty limit and didn't realize it, then you had a really nasty thing happen on your tax return where you had to repay the difference. which in many cases might be like $25,000, the difference between what you qualified for as a premium tax credit and what your premium would have been otherwise, the amount that was subsidized by the government. Well, for 2020 alone, going back, and this has been something you can't waive, it's a terrible thing. But for 2020 alone, there is no advance premium tax credit repayment required. So if somehow your income went above 400% and you are in the marketplace and you got a bill or you paid a tax return and your preparer said, oh, you have a huge tax penalty, the law that went into effect a couple of weeks ago wipes that out, and you'll get refunded that money. But the other thing to know is if you've never gone in the marketplace because it's too expensive and your income is 400% of the federal poverty limit, which isn't a wealthy person, right? This is just middle average income. We're not eligible for the advanced premium tax credit. For 2021 and 2022, you can now go online to the marketplace and qualify for a premium tax credit if your household income, if you're required to pay more than 8.5% of your household income. What that means is you have to look at, it's kind of complicated, but the second lowest silver plan premium. And if the premium for that is more than 8.5% of your household income, voila, you are eligible for now a premium tax credit, which before you were not. It can be the difference between somebody who would have had to pay, $40,000 for insurance may now be able to get it for $12,000. So I want to just make sure you're aware of that if this is anyone that has this issue. Also, if you received unemployment at all this year, then you now are going to get a full subsidy for your premium tax credit online if you get insurance on the marketplace. It's a very generous provision to anybody who has received unemployment. If anybody loses their job and wants to go on COBRA, 100% of the premium for COBRA is going to be covered through September 30th of 2021. These are huge new benefits in the healthcare arena. I just wanted to make you aware of. And then with respect to the unemployment, $10,200 of unemployment is excluded from your income, meaning you don't have to pay tax on it if your adjusted gross income is below $150,000. This was for 2020 only. If you haven't filed your return, your preparer will know how to exclude that now. We have instructions. If you did file your return, the IRS does not want an amended return. They will adjust and they will they will send you the difference. Iowa has said they're going to do exactly the same thing. Let's see. ERC credits. If you don't quite meet the decline in revenue loss cutoff, talk about in Iowa how the governor's order affected business as a partial disruption if you were not ordered to close but were affected. Yeah, so what I would direct anybody who wanted to learn about that, that's a really great point. The rules for partial closure are fairly broad now. And the way you find the particular rules from the IRS for ERC or any of these other programs is type in employee retention credit frequently asked questions, IRS. Just type that into Google and you'll get all of the IRS frequently asked questions. And within that, there is a really nice question response defining how the IRS views partial closure and how that impacts you. So even if you didn't have a revenue decline, but you qualify as partial closure, then you're eligible for the credit, but only for those days that you were required or affected as partially closed. So I see Jessica again, which probably means we are out of time here.
Yeah, so we it's 12:58 and I just want to be respectful of your time and everybody who's on. So I don't know, Kristine, if you want to just take the last couple of minutes and maybe touch on any points that you couldn't get to today, but we will for sure send out all her slides to everybody who registered following today's webinar. And then we are recording this session too. So I will also provide a link to find the recording of this so you can go back and rehear some of the answers that Kristine gave. So Kristine, I'll turn it back over to you for the last couple minutes, and then I'll pop back in to close this out.
Awesome. Thanks, Jessica. So yeah, just real quickly, I want to make sure that you're all aware for 2021, we have a new deduction that's available to you if you eat meals in a restaurant. So we can now deduct 100% of the cost of business meals that are eaten in a restaurant all the way for 2021 and 2022. This was a provision that was put into the Consolidated Appropriations Act to encourage business people to eat at restaurants, but also to give a better business deduction. So just be aware of that as you're out doing your business meals now that a lot of people are able to get back out and do that. And yeah, I just want to remind you that if there are questions that you have that you didn't get answered, and you know, this is so evolving all the time. So I just feel for you trying to run your business and trying to stay up on top of things. Feel free. I'm going to go back to my first slide where my contact information was, and Jessica will send you the information as well. But feel free to reach out to me and our website that's also noted here. Again, you'll find a lot of resources and detailed articles out there. So thank you to all of you for being online. And Jessica, thanks for being a great moderator here for us and for giving me the opportunity to meet this group.
Yeah, I appreciate, Kristine, for you taking the time today and answering all these questions. It's an ongoing process, as you had said, and there's a lot of things changing. So there's always questions that pop up. So Kristine has been kind enough to share her contact information. So I know we still have some questions coming in, but feel free to email her. And as you guys have questions, feel free to reach out to the chamber. We're happy to connect you with other businesses who can help you through the process as well. So feel free to reach out to myself or to anybody here at the chamber. But Kristine, thank you for taking your time today. And we invite everybody to continue to keep an eye on the events that we host. And we're always trying to find new topics and things to offer to everybody. So if there's something specific that you guys are looking for, please feel free to reach out to us. And hopefully you got some great information out of today and can work on some stuff. And we hope that you enjoy the rest of your day. And Kristine, thank you again for joining us.
Yeah, and good luck to all of you out there. And feel free again to reach out to me. So thank you.
Thank you, everybody. Have a great rest of your day.